What's going on, guys? Zach and Spence here from iTrendz, bringing you another watch list. This time it's the midweeks watch list. If you guys didn't know, inside of our Discord, we do weekly market preps 2 times a week, Sunday and Wednesday evening. We posted the last one for July 4th on our channel. Obviously, those trades have gone by now, but those are some really good trades that we're going to review today. So maybe you guys should start paying attention to the watch list that we bring to you in the future for some other good trades, like the one that we got right here. So if you're new to the channel, welcome. Thank you very much for watching. We always appreciate good feedback in the comments, or bad feedback, but just feedback in general on our content, what you're looking for, if we're missing something, or if you just have a question for us. Feel free to drop it in the comment section and give us a like. That really helps. And a subscription as well. We're a very small channel, so every subscriber helps, and it's free. Turn the bell notifications on. So we're going to zoom right through this. We brought the calendar to you guys earlier this week and the other watch list. We're going to finish the back half of it as we are now progressing to Thursday and Friday in the week, right? So tomorrow, 8:15 in the morning, we got ADP non-farm employment change. That's really, really important. People are looking at that. We also have at 8:30 exports, imports, initial jobless claims, and trade balance. So we've got a heavy news load right around that 8:15 to 8:30 range. That's definitely going to move the markets. It's either going to move the markets back down to lower levels, lower support levels, or move it up towards upper resistance levels. As you can see, I say towards because right here we're kind of pulling back to this 11,850, which we'll get into some levels in a second here. Then on Friday, 8:30 in the morning is the big one. This is when we have a lot of important data point releases. 8:30 a.m. we got average hourly earnings, month over month, year over year. Non-farm payrolls, that's the big one. Participation rate, another big one. Private non-farm payrolls, the other half of the big one, the first big one. Unemployment rate, that is really, really important, especially because we're expecting 3.6 and our previous was 3.6 as well. So we're expecting it to be right on par. Now we had this morning at 10 a.m., we had job openings come out, and they were actually higher than expected. So the Fed is looking for lower job openings so that there's a stronger, indicative of a stronger workforce. But we're getting higher job openings, which means that potentially the workforce is actually weaker. So this is pretty interesting because our expectations are right on par with our previous numbers. So if we were to be above or below that by like 0.2%, we're going to see potentially a pretty big reaction in the market. That's again right at 8:30. Moving along, 11 a.m. we got FOMC member Williams speaking. That's kind of like whatever. 3 p.m. we got consumer credit. That's on Friday. So let's get into the charts. Well, actually, first let's backtrack because today we got the FOMC minutes that released. As you can see right here towards the end, we actually had a nice bullish reaction after scooping up some liquidity. Nice bullish reaction off of the minutes release. Now this is exactly what we saw last time. Last time the Fed released the minutes back in May, if I'm not mistaken, they released it. Good push on the day. The next day, heavy sell-off. Given that we had a nice push into our top supply zone, 12K, if you watched the previous video, you know what we're talking about. 12K was our big supply zone on the week. Given that we pushed into that with the minutes, it's a little difficult for Spence and I to see us having too much ease to get back up to 12K and then actually breaking above and getting back to these like 12,300 levels, especially before the weekends. That would be a lot before the weekend. That would be a lot of points, 400 points. So with that being said, our mindset is that we pushed high up into the supply. We're a little bit range bound above demand. However, we're at the top of the range with small ranges for calls upside. So that's going to make it a little bit difficult unless you're very confident in the stocks, tech stocks, etc., and you're buying off demand for call contracts at least. So let's get into NASDAQ here. As we were just going over, pushed up into our 12K supply that we had on the week as our mother supply or a big supply zone on the week, right after the minutes release, and now we're pulling back. After we hit that 12K, you can see in the smaller monitor, it's on a smaller time frame, we had a harsh pullback, very, very harsh pullback. I personally was actually hoping that we would end the day near 12K because then all we needed to do was look for an 11,850 bounce, and that was going to be very easy. You could take the short down to 11,850 and then take the bounce trade off of it if you're confident enough to take that bounce off demand. However, we actually pulled back significantly into the end of the day, had a little buying pressure come in last 10, 15 minutes or so, but we had a nice sell-off, came back to the 1150, and then we're now selling off again in the overnight session right now. So with that being said, there's a lot of chop right here. This makes it very difficult to identify a short-term under level or a support level that when broken, we take shorts underneath. So with that being said, we're going to get into the trades now. So with the first trade being Roblox. This was actually on the last watch list edition that we did on Monday. We talked about Roblox breaking through this 37, basically this 38 zone, and finishing this imbalance here. It finished more than 50% of this imbalance. Really nice trade yesterday. Had a little bit of a hard time today though. So with that being said, we are looking at Roblox once again underneath this 37.41. Very, very nice trade. Basically back down to this 34, but you do have a little bit of a stop here at 36. So be wary of that 36. Again, underneath 37.41. And then of course you could also take the above if you're a little bit more bullish. I just had to look at my levels here. This 39, oh, excuse me, this wick right here, this 39.25, 39.20 zone to the upside. Now with that being said, Roblox is pretty pushed up here, so be careful on the call side, but we want to give you both sides on this. But the 37.41, that would be a huge break down to that 36 as the first take profit, price target level, and the second one is this 33.78 zone. Now for those contracts, we're going to be looking at the, if you're looking, well, for either side, we're looking at weekly contracts that expire this week on Friday. So we're looking at, I think you got to get, if you're looking for the upside, you're going to be at 38. So taking in the money 38, it's going to be like $1.80 if you have the capital and would like to place yourself in the money. But if not, you can go for these 39s that will be about $1.20. That's a pretty good trade right there. Now underneath that 37 level, let's see, looking for volume and open interest, right? If you guys have any questions about that, leave them in the comment section below. We can always do videos on that. I like these 37s, to be honest. I know we'll be at 37.40. So I'll be like right at the money. But I do like these 37s. They're very close to the money and they have ample volume and are very cheap. So moving forward, I have one more trade and then Spencer is going to go over his trades here. Boeing. So Boeing has been struggling. The Dow is actually performing much better than QQQ over the past 2.5 or 3 weeks, if we can compare it in a second here. But Boeing, the Dow is doing great. Boeing's kind of lacking here. So with that being said, there is a nice short-term, let me outline this, nice short-term scalp downside trade here underneath 134.47. Take it down to 131 and the 130 to 131.16 zone. Sorry, I just had to mark that out for you guys. The underneath 134.47 towards 131.16, 130.6 zone. You could trade the upside on this above this 138 towards this previous recent high at 140.31. Although I'm personally not as interested in that. I tend to trade Boeing only on the downside, as the company doesn't have much upside in the short term here, being a heavy levered company and inflation very high. People aren't going to be looking to acquire more airplanes at high prices like this. So like these, look at these. Ooh. I think you got to go with the 135s. And then you'd be at the money. I mean, in the money, excuse me. 133s or 134s, preferably the one that's closer to the at the money price at the time. So 134, I like these 134s a lot. Underneath this 134.47, I like these 134s. With that being said, though, Spence, you can take over some of your trades.
Oh, y'all, this is Big Stale Ham Sandwich. First trade I'm going to bring you today is Meta, aka Facebook. Saw a lot of bullish flows come flying in here. We're looking at this gap right here at about 172.61. Looking for a push up to fill this gap. Looking at a 175 call weekly. That's above 172.61. Looking for that gap fill. We saw a lot of flows, one of the highest open interest and volume contracts on the day today. So we're looking for Facebook to continue that motion towards that upside. Maybe with a little pullback to that 168.31. We're still looking for that continued motion towards that upside. Underside, I'm not really interested until about 165.45. But we're really looking to see if it can continue that upside to fill that gap, which you can see on this daily chart that Zach has marked out really nicely.
I do have to say also this, looking for a 168 bounce on this with how strong it is.
Yep. We've got a little pullback that'll help out significantly. And that goes to say, in general, in this market, we have seen a nice push up these last few days. We do need to see a little consolidation towards that downside to continue up to build out some structure right here where we're at. and that's something we're going to be looking closely to see. Next trade we're going to go into is Amazon. Amazon, kind of same thing, had some nice flows, has a significant amount of open interest and volume on the 115 strikes. I'm looking for a continuation on this trade. I'm looking for Amazon above 116.33 to take an Amazon 120 call for 715. Looking for it to confirm over that 115, 116 area and push up and kind of fill this gap where we started, back up towards that 120 to 124 gap when we first made the stock split. On that downside, if we do get below 112.65, we're coming right towards a 110 put. And if we break below that, you can see it next hold around 109.45 to 107 towards that downside. So like I said, with the same thing with the Facebook trade, looking for a little consolidation, maybe around 114.45, 114.50 for it to come down to, and then take it more for that upside. Next, always have to go over it. The Mouse House, big old Disney with Chapek involved. Not much bullish sentiment here. Shanghai did reopen, but they're still seeing cost pressures coming throughout. Still in the same range. We're looking above 97.67. I'm looking at that 100 call. 100 is going to be an extremely hard level for Disney to break. If it does not, and we still see this trickle down around this 94.35, I will be looking to take some 95 put weeklies in the money. So, but Disney's pretty range bound here. We're looking for a breakout. If you look on the financials, it's significantly undervalued. So that's why something I would be extremely careful shorting Disney. Long-term potential downside, if we do see this recession come in, is around $87, and then you'll see me screaming for the long side. So next trade coming up is Netflix. This is one that I think that, as well as Stranger Things is, and go watch the last season. I'm not an ad, but it was awesome. Watch the last episodes. That being said, I do want to short this because it looks gross and not one series can save your whole company. So I'm looking under 182.39 to take a 180 put weekly. Not really interested in that upside. It would have to break 186.10 to keep pushing. I just think the cost of acquiring new content and if their line isn't too strong coming out, I don't think it's going to save them. I think that this company is in a lot of trouble, especially with them trying to announce an ad-based revenue, that kind of thing. I just think there's some structural things inside the company that are real issues. And just looking at this chart, having a real hard time breaking over that 187. So I can definitely see this breaking down to that 180 in just the weekly short-term side, or taking like a 175 for 715. Another couple trades that are on the alerts, and we'll have these in our watch list going down below. We're watching Target, AMD, Chewy, and Nevada.
Yeah, just a quick look at these charts here. What are you looking at Target? Because I want to bring up Costco as well.
Target has really interesting bullish divergence coming in on the RSI at this low point. We're looking for Target. We need a little more significant break. Looking above 147.20. What we're looking for is this push back up towards that gap fill. Not a lot of contract interest here, though, so you do have to be careful. That being said, it gets over 147.20 with his RSI kind of building. I could see a push back up into this 155, 160 zone. Yeah. But breaking under that 140, and then it's just back into trouble. But coming into earning is 817. I do think I am watching a 155 call for Target for that 819 strike just for earnings. This is just significantly beaten down, and I think that they will get inventory under control and be in the right segment. So I'll be looking for this to push forward. Candy for Halloween is actually one of their best selling items, so it's something to look forward. And we'll pass it back to Zach to go over some Costco.
So
Costco, hot dogs.
Costco's interesting here because it's outperforming some of the other retail after their big shock, big bad days, 20-30% down on some stocks, etc. And had a nice rebound here. You had actually a really, really quick rebound. It happened to occur right before earnings. So very low buy opportunity for some of the investors. Grabbed it up here, pushed it up for earnings. And now we're creating this big rising wedge inside of a huge supply. What makes this as a huge supply is the fact that we've spent months and months and months using it as support, right? We dipped below here, but overall this area is big level of support with some lower dips. but 500 as well, right? So that's like a psychological number of 500 is pretty big, and trading underneath it is not very good. Today we wicked off of 497 here. Now this is not necessarily a trade that I'm looking to take, but it is tomorrow. That is, I am looking at monitoring this as it does approach and spend some time in the supply zone and maybe reject 2 times rather than just once, right? Come up rejection 1 here, then pull back to this 485 zone, 46 zone, and then push back up, reject again, right? That'd be a very solid entry if you have 2 confirmed rejections of this big supply zone that we're sitting at here. And if you pick up enough time, like 715 isn't enough time. So you got to have some money in your account to play this, especially because we're going to August. So there's going to be some big dog contracts. You probably get some for like $5 or $6. But anyway, very nice rejection off this 500, a 2-time rejection. It's looking very nice for a swing short all the way back down to this 440. Even if you wanted to take more of a conservative price target, you have this 450 price target. So you could even go, you know, right now you could even go about $40 out of the money, and your price target being 450 still hit inside of even though you're super far out on the strikes. So that's what I had to say about cost. What was some of the other ones? Chewy, right? We were looking at Chewy.
Yeah, this is one I want to take a look. You can see this cup handle forming out right here on this chart. I like this push up off the bottom. This is kind of reminding me, it's really similar to Roblox, especially with volume and contracts. I'm looking at Chewy to push over this 4105 to fit back into this 46 range right above that volume shelf. If it can't and it breaks down below 38.72, kind of same thing, looking towards that 35, almost identical to Roblox. I think it's kind of similar in charting and as way the contracts move as well. I'll be looking to see this push back down if we can't get over and confirm this next zone over this 46 level. It did have a significant bounce off the bottom, which I thought that was great. But like I said, these charts, just that there's not enough support in them for me to take it higher. I would have to see the bulls take another leg up before I would do it. But it's definitely interesting watching the volume and the contracts here. So like I said, over 4105, under 38.72.
This is pretty crazy because this is like a textbook cup and handle right here. This is textbook. This is textbook. And right, patterns don't have to play out the way that they're supposed to, but this is like a textbook, really short-term cup and handle. And if you're not familiar with what a cup and handle pattern is, we actually have a book on patterns and indicators that we have listed on our website, iTrendzTrading.com. Go to the ebooks tab. It's right there. We do 22 pages, I believe, we have on the cup and handle itself. The book itself is 5 indicators, 5 patterns, and some bonus content in there. Over 200 pages plus, packed full of content. One of them happens to be the cup and handle. So if you don't know what we're talking about, what we're looking for, that might be a good place to start. For example, one thing that you might not have known about the cup and handle pattern is that the handle, there's a law that states that this handle should not retrace more than 50% of the depth of the cup. So this is 15%. Let's just take it again. All right, 82%. So 40% is in the middle. Where's 40%? That's a lie. 82%, 40%. That looks so weird right there. But 40% would be too big of a dip. That'd be over 50% or at 50% of a dip in the actual handle portion, which would then invalidate the cup. So that's just a little tidbit. And actually an extremely important law about the cup and handles. Those are some things that you'll find in some of our ebooks as we take a lot of time into making them the best that they possibly can be for you guys. So with that being said, I know our watch list is a little small. It will be dropped down in the description below, so feel free to check that out. Tomorrow morning, you're going to need to reassess these trades because this overnight movement could bring us down a leg. If it pushes us up into the big supply, then be careful on your longs and look for people to try and get their trades for the longs and wait for the market makers to come in and sell us back off. If we were to pull back down underneath, we'd have to see where we open up for either a demand grab or an under to take the stocks lower, right? So anyway, with that being said, feel free to drop some feedback in the comment section. Like I said, we really, really appreciate that. A like on the video, subscribe, all that. If you're interested in joining our community, checking us out on our website, all those links are going to be down in the description. So feel free to check us out. That's been iTrendz, and we will catch you guys in the next one on next Sunday.
Still ham out.